afternoon, everyone. It's Alyssa Corum and Ken Shreve here with a look at the stock market today. And on today's show, we're going to be analyzing the charts of DocuSign, Cloudflare, and Domino's Pizza. But we begin with a look at the major indexes. Right here, you can see a chart of the NASDAQ. We did reverse today to close lower. The NASDAQ down about 1% for the day. The S&P 500 down 1.6%, and the Dow down 1.8% to cap off what was a pretty ugly first quarter, Ken.
Well, it definitely was an ugly first quarter, and I mean, in terms of the index's performance today, we had rallied pretty sharply off of lows over the past five trading sessions. So a little bit of profit taking, or whatever you call it, in the stock market today. But we did reverse lower. It looks like volume is going to come in pretty close to what we saw Monday, but we are still in a rally attempt here, and still looking for that sign of strength in at least one of the major stock indexes, but haven't seen it yet.
You're right. We definitely are still in that rally attempt. So it's very important to keep that watch list fresh. And DocuSign has been a stock that we've been talking about quite a bit lately, with a gain of about 4.8% today, a really strong gain for a stock that has shown significant strength in this market.
Yeah, no question about it, and it was actually did a rare thing today. It actually broke out of a base with a 92.65 buy point. So weakness in the broad market eventually got in the way of the breakout, and it looks like DocuSign closed in the bottom half of its range. But so it's again that the buy point of 92.65 is still in play, and this is really we've been talking about it on IBD Live, and it's truly a market leader with an exceptionally strong fundamental story with big annual earnings estimates. So we still think the stock has the potential to be a leader, and it was definitely a bright spot in a down session Tuesday.
Right. And while we are still waiting for that follow through day, as you mentioned, when it comes to stocks that are clearing either aggressive entries or traditional buy points, what should investors be doing in terms of position size for these trades?
Well, without question, you need to start small because we've been talking about this recent vertical violation that we saw in the Nasdaq, which was basically a very sharp break of the 50-day moving average, and big percentage declines over a fairly short amount of time. So we know when we see that type of price action, it can often be a little while for the market to find its footing. I think the S&P 500, Nasdaq are making a pretty good case so far. They've hit a bottom, but again, we're still not entirely convinced. We still want to see another, move with conviction by the Nasdaq or the S&P 500. So until that happens, anybody that wants to try a stock on for size or maybe nibble at a stock or two, you want to keep your position size very, very small. You don't want to, bite off too much at the start. So if you're wrong, it's not going to cause a big hit to the portfolio.
Yeah, that's right. And elsewhere, let's check in on the chart of Cloudflare, a recent IPO out of the enterprise software group. It did have a downside reversal of its own today, closing down about 1.7% after a strong gain early in the session. What do you make of today's move, Ken?
Well, the stock got pulled down with the broad market. Obviously, I mean, we did open with decent gains. I know the Nasdaq at one point today was up 1%. So, but the broad market reversed lower, and that definitely had an effect on Cloudflare's breakout. This is a stock that initially cleared a consolidation with a 22.18 entry, and then it really fell sharply, flashed a sell signal, but then it reclaimed the buy point with conviction. And today it hit a new high, but shares reversed lower in higher volume. It's just a good example of why new buys are always risky with the market in a correction. So we believe this one still has the potential to be a leader, but big sellers were in the stock today, as they were in the broad market as well.
Definitely. And speaking of leaders, we of course have to check in on the action for Domino's Pizza because we saw a somewhat significant decline today, Ken, with the stock down about a 6.4% for the day, heavy volume. Now, this has been a stock that has held up extremely well given the market volatility. So, what do you make of the drop today? I mean, it is still holding above that key 50-day line.
Yeah, I mean, so despite a 6% decline, it is still holding above its 50-day moving average. And you can see the 50-day moving average here, which is the red line. That is, above the stock's last buy area, right around 300. So despite the weakness today, this is the technical picture is still intact. The reason why shares were weak Tuesday was because late Monday, the company came out and they gave preliminary sales guidance on a few metrics, same-store sales, overall sales in the first quarter. And while they're expecting growth, I don't think it was growth that slower growth than the market was expecting. But when you think about it, that's sort of to be expected when we're going to be in a first quarter earnings environment where a lot of companies are going to be lowering outlooks and withdrawing guidance, which Domino's did. And the market might have also been scooped by the fact that it tapped into the remaining $158 million credit facility just to raise a little more cash to survive this coronavirus outbreak. So disappointing performance for Domino's today, but this is a long-term leader in our IBD long-term leaders portfolio, and still like business prospects here.
Yeah, that's right. I mean, this earnings season is definitely going to be a test for a lot of these leading stocks that we've been tracking. So once again, that's why it's especially important to keep that watch list updated. And as we've been saying on IBD Live, uh, you definitely want to keep track of when those earnings dates are coming, and also the earnings dates for key competitors, because that can also move leading stocks in a group.
Yeah, I mean, listen, what Domino's said today is what a lot of companies have been saying. It really is almost impossible to have any sort of feel on what guidance is going to look like for the second quarter, third quarter. We just don't know, again, what the extent of the coronavirus spread is going to be. I will say that with the market moving nicely off lows, it does seem to be pricing in possibly the fact that we could see a real slowdown in new cases in the U.S. by late April. Early May, and then with new cases really falling sharply by early June, early July. That's what the market is kind of hoping for. That's sort of a general timeline that we've been given by a lot of models. So we'll see if that pans out. But for now, the market is still in a correction.
Yes, that's right. Well, we'll have to see where the rally attempt goes from here. And you can be sure we're breaking down all the in-depth analysis you need on IBD Live every morning. So make sure you check that out if you haven't already at investors.com/IBD Live. And just a reminder, you can get a free 2-week trial to check it out and see what it's all about. But I mean, from going over current examples and the nitty gritty of the technical and fundamental analysis, and historic examples of what as well of stocks and historic market conditions. I mean, there's just a wealth of knowledge and information sharing that goes on in IB Live.
Yeah, no doubt about it. I'll be on tomorrow morning, starting off with the news, and we'll talk about more interesting stocks and bottom line stocks that we believe have the potential to lead a new confirmed uptrend. They're starting to take shape now, and we talked about a couple of them, DocuSign and Cloudflare today. But there are others as well that are forming right sides of bases here, and could be getting into position for breakout tries.
Yes. So make sure to check out Ken and the team tomorrow morning on IBD Live, and we will see you right back here tomorrow. Thanks for watching.